Yeah, hi everybody. It's Tom Williams here, speaking to you from Worthing. Nice little holiday town, the south coast of England. It's not too far from the beach. The seagulls have all left. They've stopped nesting, so they've gone off to wherever they go. But they're not squawking around the house now like they were a few weeks ago. Now, sorry, I believe there's a slight delay in our start here, and the reason is that Peter, that's Rita's husband, had to stay at home because he has a bad cold, and so he's not feeling too good. So Rita is doing a fine job here, but she's technical stuff, you know, they are. But she's got her head around it now, and hopefully you can all hear me, and hopefully you can see my screen here.
Can they just confirm that? Oh.
Can you confirm the screen? Can
yes.
you?
Yeah, they can.
Oh, good. Now Rita's looking at the at her computer, which is tuned into mine. Okay, so what have we got now? We've got the end of day chart.
This is the daily chart of the E-mini.
Yeah, of the E-mini futures. And you can see that, it's all right. We can see what's happened here. This is made a fairly good high here, but this is highly unlikely to have the ability to go up through these tops here, because these old tops here is quite a serious top, look. I mean, the supply hit the market here, right? They held it up, right? Even tried to do a little test, and they had an upthrust. So this is a fairly serious distribution area, right? So once they have these upthrusts like this, that you can see there, I think we saw this as it was happening a week or so ago. So we know it's a serious area here. Now, when you come back up to that level, look, it's highly unlikely today is going to push up through there. Why? Because it's a resistance area. And do we have enough accumulation of strength down on the low here to push it through? Now, okay, so that was Monday. Look, we're looking at Monday here. We noticed that on the Friday, look, we had a red down bar, and look at the low volume. That's what brought that signal up.
No supply or test.
No supply or test, it says. Right, read those dialog boxes carefully. Okay, so no supply. Now, as we know, the markets move on supply and demand, right? So there was some subtle demand here. It's not all that obvious, but there is a slight increase in volume, right? Up and down. So there's only three bars there, look, where they're actually buying. So is 3 bars buying enough to push that right up through that top? I doubt it somehow. Okay, I just come up with a signal there, right? And this was Monday. Whenever you see a bar like this, you've got strength immediately behind you, the old saying goes, when it tries to go up, it tries to go down and close in the middle, right? The market's about to move. That is a traditional old saying. So when you see it try to go up, try to go down, close in the middle, a move is imminent. Now, because we've got these strides of strength behind us, we assume the imminent move is up. Well, certainly a warning for you. Now, you often see this here. Try to go up, try to go down, close in the middle, right? A move is imminent. And because we've got strength right behind us, strength enough to produce arrows, look, so they must be fairly reliably in there, embedded in that data. We're not seeing that with our human eyes. It's a cold calculated computer is seeing it with some simple basic instructions, which we tell you what they are, right? And that's what it is. The market went down here. That was Friday. The volume is low. No selling pressure. That's what the dialog box tells us.
No supply or a test.
Yeah, no supply or test. Right, so that means that if there's no supply, it must mean they must be more bullish than bearish. And that's why it went up, look. And notice the blue trending, I call it the simple trending system. Right, all the time it's blue, it's trending up, because the professional money behind the move, they must make sure they don't lose control of the move, because there's no friends in the market, and they don't want to be swamped by other professional traders selling. And that's what they do. And all the time it's going up, everybody stays on board, look. However, now we're here at Friday. It's gone up. It's closed well off the high already. We can't calculate what the volume is yet because it's far, far too early in the day. But it's highly unlikely to go up through this old top. If there was a big sort of shakeout or very clear test here, or even more accumulation, just 3 bars, look. And of course, the trend line here, we were slap bang in the middle of a trend channel. This dotted one is the 50% retracement, which is liable to have some support on, right? So right now we're up here, running live, right? It's meeting no demand at the moment. 2, 3, 4, but the market's only been opened 2, 3, 4, 3 hours, so all sorts of things can happen. But you certainly wouldn't be interested in going long at the moment. It's more likely to come off and go up, I would have thought. But you don't make a decision until you see a clear principle occur. Now, there was a clear principle there, look. But how many of you spotted that? And then remember these bars. It tried to go up, tried to go down, close in the middle on a slight increase in volume. What that means is that when you say slight increase in volume, there wasn't sufficient volume there to say it's hit supply, and there's enough volume there to say that wasn't no demand. Does that make sense? So we'll watch this, and but do not expect that to go up through that top there to the left. Not on any sort of genuine move. Now, is there any questions about that particular chart? And we'll look at something else. Anything?
Yeah. Michael, we keep having it's about this e-signal data being a day behind, and I'm afraid personally I don't use e-signal, so I don't have any problems. Yeah, this is e-signal. Anyway, someone, maybe you can help. Anyway, Michael says, I thought the daily volume on e-signal was behind a day, so wouldn't that no supply actually have the really high volume that is the bar to the right of it?
No, but this is the future.
But this is the future. Hang on, Tom, you answer, because I'm...
Yes, you see, you're talking about the end of day chart, but this is the live future running. So there's no delay, and the volume's not delayed, or the activity is not delayed. So don't get your charts mixed up. Right, it's a good point, though. I mean, they like to delay the volume if possible because they know how valuable it is. Don't worry. If it wasn't valuable, they let you have it. But the fact is they try to conceal it or delay it or whatever shows you it must be great value to them. But they still expect you to pay for it, which is kind of interesting. But this is a future, a running future live. Does that answer your question?
Okay, you've got loads of questions on this chart. Loads of questions on the... Oh, right. So Michael says, yes, thank you. Right. Right. Carrie was the first question that came up. So what does Monday look like as an hourly chart? Where was the big volume as a clue to direction for the rest of the week? So Tom, Monday, Tuesday. So that's Monday. Monday is the
You're going to have to go back a long way.
1st of October. We'll get there. 1st of October. Right, that's 1st of October. Right, so we're on, oh, that's 2nd.
We're certainly buying there.
Yeah. Hang on, Tom, I want to find, oh, what am I doing? 1st of October, sorry, right. 1st of October, that's the 3 p.m. bar there, Tom. So a question, right.
I thought you said Monday.
Monday. Yeah, was Monday the, what date was, hang on. Yeah, that's the 1st of October, Monday. Monday was, yeah, Monday was the 1st of October. So this is the opening. And the question was, where was the big volume as a clue to direction for the rest of the week? There it is.
Right. Thanks, Rita. Right, here we got an hour chart, and although I can't see the dates very well, Rita tells me this is last Monday when the market opened. Now, professional money has to have movement to make money, right? And so there we are. We've got markets do not like ultra-high volume or ultra-high activity as the market moves up. So not only does it move up, it's closed in the middle, look, right, after you see an up move. So the market becomes vulnerable to one or more professional groups deciding to take a profit. And there's an automatic signal appeared. What's that say?
Potential buying climax.
Potential buying climax. Well, that's what they look like. Read these dialog boxes, whatever you do. So, okay, so the market falls, right? Notice how the trending system works. These red bars, they don't stay like that by accident. That's done deliberately to make sure that anybody, as many trades as possible, are locked into the high here. Whenever you see a blue up bar in the downtrend, you can always tell if prices are going to drop further because, look, it's no demand. So notice the spread is narrow. It's closed just slightly off the high, and the volume is pink. That means it's low. So then, bang, down the market falls, and professional money then decide to move back into the market. And there's their activity moving in, right? It's in fresh low ground. You've got a drop behind you. The market's closed in the top lower quarter, look. But the main thing is high volume, right? That means that they've stepped in. It doesn't mean to say the market's going up. But that's what caused the up move to there anyway. And then there's still some supply in the market, look. But the computer does a fairly good job of picking all this up. Even here, look, you've got a down bar, right? The volume is quite low, roughly speaking. And you do seem to have some stopping volume here, look. And they mark it up, look, as fast as they could. But there's not a lot of demand there, look, because as the market goes up, this is now a chart. That looks like a weak bar, and that certainly looks like a weak bar. That is clearly no demand. And this one here, it's up on a narrow spread. It's closing in the middle, and the volume is certainly low.
That's the end of the day there, Tom.
The end of the day, is it?
Yeah.
So it falls off. Every time you see a blue bar, look, this is Globex, right? You'll see no demand, even in Globex. And so I think I'll better go back to the current chart here, look. This is an hourly chart of what we're seeing now. And when I showed you the daily chart and said it's highly unlikely to go up much higher here because of this old top to the left. And there's the high volume on these up bars, which it does not like. And even though, admittedly, this is high volume, it's a down bar, but it's got what we call hidden up thrust in it. Whenever you see a bar like that, and there's more of the body of the bar above the close of the previous bar, that means it must have gone up there at some time. And if the volume is high, it must mean that they were selling in that area, selling. That's why it knocked it back down, look. Okay, so that's a weak looking bar. Right, it's fallen here. Sorry, the mouse seems to jump around. Here we go. So we have a down bar here. The volume is quite low. So the market should hold a bit at the moment. But that's an hourly chart, and there's certainly weakness there, look. And it's highly unlikely to go any higher because of the old top to the left. Right. Now, of course, if we see any up bars now on no demand, that's what you'd be looking for to short the market. If it moved back, if it moved, I'm not saying it will, I say if it moves up there. Your job as an analyst is not to say, oh, it's going to do this or it's going to do that. Because if you talk like that, sure as anything, it won't do it. What you say to yourself is that if it goes up on no demand, I'll analyze that and know what's going on. And you might see a small test even, which might allow it to go up on no demand. But you let the market unfold as it's running. Now, is there any questions on that hourly chart as we see at the moment? Reese's looking at the screen intently.
Yeah, there's billions of questions.
Billions.
Not necessarily about. I'll just tell me. I don't know if that's how I pronounce your name, but yes, he uses e-signal data. So that's the answer to that one. If we go back to the daily chart, there's two people interested in, I think, this chart, that bar there. Yeah. Is there? Do you have a name for that bar? That's one question, and the other one is, on that bar, does it make any difference if it tries to go up first or down first? Does it have a name?
Well, I'm sorry, it doesn't have a name. Unless you want to call it try to go up, try to go down, close the middle name. That's a fairly easy kind of name to remember. So try to go up, try to go down, close the middle. You see that quite a lot, actually. and it doesn't seem to, I mean, to be quite honest, I've never studied it closely in smaller time frames. So whether it tries to go up first and then down, I don't know. But I would have thought if the market's bullish, it'd probably try to go down first. And that was like a successful test. You all know what a test is, don't you? A test is when they mark the market down, right, on a narrow spread, usually closing in the middle. Don't forget the narrow spread. That's why we call it volume spread or range analysis. And the volume or activity is low. That means that the professional money sitting in the background are not interested in lower prices. Now, they're always interested in moves, and that means that if they're not interested in lower prices, then they're expecting higher prices. That's a test. Any questions?
Okay, Abdul says, candlestick-wise, I think it is called a doji, and marks indecision, and then they will typically take it in the direction of the break above or below.
Well, I don't follow candlesticks, to be quite honest. Now, the only reason I don't follow candlesticks, I don't follow mathematical formulas, as you know, because the syndicate I've worked with for 15 years, they never used it. And that's the only reason. But I'm sure candlesticks, but candlesticks is missing the big ingredient, volume or activity. But the market moves on supply and demand. If they mark that down in the start of that bar we saw Monday, excuse me, and the volume was low, that means there's no selling pressure. So they may have whipped it up and then down. Who knows why they're doing this? Don't ask too many questions. Just look at the chart and believe what the chart's telling you, because you never find out the truth anyway. So you waste of time trying to be too clever analyzing it. It will move on supply and demand. If there's no supply in the market, which is fairly evident there, all right, especially on the previous bar, that's going to go up. It's as plain as that.
Okay, yes, John, we'll just get to your question. You want the 28th explained, where someone else was asking the other. We'll get there in a minute. But thankfully, Philip would like me to clarify something, because he's more knowledgeable about these things. He says, sorry to confuse things, but can I clarify the volume on daily charts with eSignal? They show the volume a day late, e.g. the volume they show for the 28th of September should be the 27th, and so on. So Tom's saying that's bad. A normal end-of-day data feed in the end-of-day program should not do this. So in future, Tom, I think we'll just stick to your end-of-day when we're commenting upon the daily charts, because there'll be no confusion there whatsoever. Whereas this is a bit different. Wayne says on London stocks it is okay. Okay, thank you, Wayne. The other thing was, I think you asked a question about a London stock, but Tom doesn't have the data for that, I'm afraid. Philip Friston has data for London stocks, so he's the one to ask about those. Okay, and now John would like you just to explain this bar here, Tom, and what you'd call it. The 28th. This yeah. What's it called? He wanted to know. Well, so
I thought I'd just answer that question. As far as I'm concerned, I don't have a name for it. It's just something that
this one here.
Yeah, that Monday.
No, that's Friday, the test, the no supply test.
Oh, that one.
There, 28.
Oh, sorry, last Friday, yes. Okay. Well, okay, we've seen on the previous bars, right, always look at the previous bars. That's a bar you're talking about, right?
Yeah.
Okay, we've seen on the previous bars, we do have signs of strength on there. Now, there's not very obvious, look, but there is an increase in volume here, look. Enough to affect the market, right? Okay, so just close off a low. Then the next bar, look, is up, responding to that bit of buying there. Now, unfortunately, some years ago, people altered some of these signals without my asking or anything like that. That signal should really be on that bar there, because that bar there tells us it's stopping volume, right?
Yes.
Okay. Well, it's, see, once that was in, I couldn't get it out. It's wrong in a way, because the stopping volume's there, look, on the previous bar. Slight increase in volume, and that's why it went up. Okay. But it is a sign of strength. It's responding to this previous bar. Now, professionals have seen that. Don't forget, you're only talking about 3 bars down here. So they test it. So down it goes. There's the low volume. Although it's above the average line, it's low compared to the previous 2 bars. So the computer said, right, so this relatively is low volume because the 2 previous bars are higher. There's not a lot in it though, but it's pink, look. Computers color that volume or activity pink. Now that means that when it went down, there was little or no activity from the professional money. And that's why it closed in the top of the bottom quarter, look. So that's what brought that signal up. All right, now professionals will be fully aware of it. They know that. They've seen all that. Right, and that's why the next bar, Monday, right, they try to go up, try to go down, close in the middle, on a slight increase in volume. There it is. That's an old saying. There's going to be a move imminent. Yeah. And then when you look at these bars back here, then you assume the imminent move is going to be up. And then the simple trending system keeps coloring the bars blue because professional money behind that small move are making sure that the close is higher than the close of the previous bar. There are no friends in the stock market, and they don't want other professionals dumping on them, which is going to spoil that little up move for them. Now here, this is actually running live. It's today, Friday, where, well, it's far, far too early to judge this, but right at the moment it's going up on no demand, look. And that's because we've got the whole top away to the left, and it's highly unlikely to push up through that unless we see a shakeout or something. And there's not a lot of accumulation on that low bit, is there?
Could you take your magnifier off? Could you take your magnifier off? Thanks, sorry, Alison. Okay, yes, Mark. Actually, it's difficult. There's so many questions and comments, and I don't want to keep flipping from one to the other. So back onto this bar here. Carrie, I've never heard of the term, but Carrie says it's an inside day with no supply. Have you heard of that term, Tom?
Yes.
Oh, you have? Tom says he has heard of that. Do you have a comment, Tom, on that? Inside day?
Well, of course I've heard of inside days, and in the past, a lot of traders put a lot of emphasis on that because if the higher the bar is lower than the higher the previous bar, and yet if the low is higher than the low of its previous bar, then it means supply and demand has been squashed down. Markets don't like that, and therefore they have to break out. And if that bar is down on a low volume, that means it wants to break down up to the upside. But see, we don't recommend or use mathematical formulas. We don't recommend anything except read the charts. There's all sorts of things out there that may sound good, may sound wonderful, but as you learn to read these charts, you realize that you cannot beat reading these live charts like this. And that's if you want to trade these markets for short time. There is strategies for trading long time, of course, but we're really showing you how to analyze these markets on a fairly short time frame. And there's a lot of traders out there who love to just take relatively small profits, quite happy with $800 here, $900 there, and you can do it by reading these charts. But you've got to be very careful and realize that the market is not there to help you, despite what they say, despite what they might say, despite they tell you all the news events are coming out and what time, because they want you to listen to the news. That's why they tell you, don't worry, if it was really information that you could make you money, you definitely wouldn't hear it. But they want you to listen to the news because they want to get you to think that the news is going to help you. But all they do when the news event comes out, which you'd be very naive to think they weren't already fully aware what that news was, they can whipsaw the market around that news, usually to your loss. And so that's why it's done. I'm sorry, but that's what happens. I know it happens. We've done it many, many times.
There are some questions here about data, and a few people a little bit concerned. David says, I'm confused. Is the volume I'm seeing on my Infinity intraday charts real volume in real time? Well, if anybody else can answer that question, please put it in the questions box, because I don't know the answer to that. And probably, yes, it is, says John. That's that one. Thank you, John. And then Lance says, sorry about this. If I am looking at my charts, for example, the gold spot chart, and I see a no demand bar using my e-signal data, is that low volume going to be incorrect? And I don't know. Tom's saying it will. But if anyone can answer that question, that would be helpful, because I can't. E-signal intraday data is fine. Yes, just as I thought. So, says Philip. So, when Tom, as I said to Tom, if we're going to be commenting on daily charts, then we must use our end of day and not this futures thing. Right. Okay. And Mark's comment, Mark, your comment was on this particular bar, I think, the Monday. The Monday. It was, we were talking about going up, down, and everything. And he says the Wyckoff course said it tried to go up, down, and middle bar signified the completion of whatever it was that they were doing, either accumulating or distributing, and it marks the end of a phase and a beginning of a new attempt to make a move.
That sounds very accurate.
And Tom says that sounds very accurate. Thank you, Mark. And Mark wanted us to look at the 5-minute. Whilst we're doing that, we're going to put, that's the 5-minute Tom intraday chart. Question from Abdul. Are the yellow rectangles at the top and bottom longer term signals? How do you utilize them compared with the triangle signals? Right, well, the yellow boxes are just sort of a warning Actually, we haven't got one up here, have we? Oh, we have got one up there, haven't we?
Yeah.
There. So on that bar there, if I click on there, when that bar came up, the program at that moment decided that it could be a no demand bar, but that yellow box doesn't turn into a red signal until it's confirmed by the next bar. So the next bar was down, so it confirmed that, and then it turned it into a red triangle. So do you have any comments on that, Tom, on the yellow boxes?
I mean, I don't like them.
Tom doesn't like them. If it is green versus yellow, well, that's the opposite direction. If there'd been some strength somewhere, it's vice versa. So here we've got a yellow box, and it suspects it's going to be a no supply or a test. And because it was confirmed wherever we were, and the next bar, what about this one? Basic test, and it was confirmed. So because the next bar was up, and there's the green signal. Right. Do you want to comment on this 5-minute chart, Tom? At the moment, is there anything to say?
Well, it doesn't matter what time frame you look at. Embedded within that chart will be signs of strength or weakness, which will be on all the charts. Some may be easier to see than others. I mean, here, the 5-minute chart, okay, fair enough. Just here it looks like they've had an attempt to shake the market out. Right, got a red down bar, closing just off the low. There's a definitely increase in volume. And on that, it shot up close on the high. That's normally would represent a sign of strength. In other words, they're trying to make the market have higher prices. And if they get an opportunity, they will do that. We call them bottom reversals. Right. However, as the thing rolls on, look, we got a blue up bar, but there's not a lot of enthusiasm with the volume, look. And that's why here, it's definitely very obvious there's no enthusiasm for up move. That's what brought that arrow up. Right, and even here, look. Right. So we have a down bar. So you can read all these charts. But if a chart looks a bit tricky for you, look at another time frame. Some of them are so obvious. It's quite interesting, really. Some of them, because of the time frame, it might be difficult to see some of the principles unless you become an expert and really put some effort into looking at it. But look at different time frames and try to go, I was going to say, with the trend. I don't follow, the only trend I follow is trend lines because they work. We've proven that in the past. The trend lines do definitely work. But what we're looking at, I think, is the market's chugging sideways. It's trying to keep up higher prices, but you've got that whole distribution weakness to the left when you look at your daily chart, and that will prevent higher prices. So you obviously won't go long.
A few comments about our conversation just now about the green and red arrows and the yellow boxes. Alan, in regards to the arrows, red or green, I thought they are produced after the bar and not after the confirmation of the next bar. You're right, they are produced after that bar. Not all of them, says Tom. Do you want to comment on that, Tom? Or?
Well, originally, you see, we're so concerned about our users out there that we want, because we tell you how dodgy this market is or can be. So originally we wanted to see, or they were coming up, actually all of the signals were coming up on the bar, right? Now, when you do that, that's fine. But sometimes, as you know, you may get a sign of weakness. A red arrow appears on the bar, but the next bar might be up because professionals would have seen that weakness and want to go up to catch stops or go short at a higher price. Don't ask too many questions, but we see that. So some of us had the bright idea, what would happen if we delay to the next bar to confirm that bar? So in other words, if you saw a blue up bar and a red arrow appeared, if the next bar was a red one, it would confirm that it was fairly genuine. And but if it doesn't do that, a yellow box appears, which still warns you that there is some sort of weakness in there that you need to be aware of. But you'll soon get around seeing that. It's a flow of information coming to you all constantly. And when you learn to read that flow, don't forget, a chart is a language speaking to you. Once you master that and can see that, you'll sit back with a big smile on your face at all the things you thought and did previously. We've had many comments on that. People said, well, I lost money and now I look back on this, I realize why, and all this sort of thing. And you don't trade unless you see an obvious principle occurring. Okay?
Good, that's good, Alan. Yes, Alan says he's got it now. He understands. Thomas asks, in the add-on programs where you don't get yellow boxes, do you just get the signal on the bar? Is that correct? I know nothing about those add-on programs and have never used them, but I assume that's the case. But if anybody else has any comments, please type them into the box. Right. Hang on. David asks, could you please explain how to use the thermometer in trading or in this trade? How do you use the thermometer?
Now, again, Gavin, at the moment, Gavin Holmes, he's in Sydney, Australia. And usual, he's taken 2 other people with him. I don't know why you need 3 people to do a seminar, but there you are. But he's controlling the way this software's developed. And I have already developed a new volume thermometer, which was put into a program. It worked 95% of the time. Matter of fact, it was so accurate you could trade on it. Because 100 years ago, Richard D. Wyckoff told us that bullish volume was expanding volume on up bars while decreasing on down bars. Bearish volume was the opposite. It's increasing volume on down bars while decreasing on up bars. And that's why in a weak market, right, you get no demand up bars, which we've seen frequently, even today. Every time you see a blue bar in a weak market, it's up on narrow spread, but the volume is low because it's decreasing volume on up bars while increasing on down bars. And yet a bullish market is opposite. It increases on up bars, but not excessively, and decreases on down bars. That's why you get a test. When you see the market falling, if the market's bullish, the volume will be low. Right? Now that thermometer on the vertical on the right-hand side, if you put the cursor onto, say, the top of a move in the past and move it forward bar by bar, you'll see, in fact, that the volume does tend to be red and fill up the top half. Now, this was done many, many years ago, almost one of the first things that were programmed into this, right? And at the time, I had to tell the program to average it by 2 or even 3 bars because it was jumping around so much it needed to be smoothed out. Of course, the new one doesn't need that. It actually acts on the bar. So it was jumping around. So I've never shown a great deal of enthusiasm for looking at that volume thermometer for that reason. I don't like things that have been averaged. But it's there if you look at it. But it's not good enough, I don't think, to trade on. But the new one, if Gavin's wisdom, you get hold of it, is really worth having. Take my word for it. It's very accurate. So I wouldn't worry too much about that volume thermometer. You can look at it and move the cursor around and see what happens. You cannot beat reading the bars, as you can see. And you look at these automatic signals. If you think they're pretty good, right, and that means that the information that was fed into the program by programmers must be accurate, because computers do not understand flaws in your thinking, flaws in your logic. It just doesn't want to know. You've either got it right or you haven't. So you can be rest assured that what we tell you, as I say, we don't hold any secrets at all. We don't hold back any secrets. We don't claim to have any secrets. If you see a website and they're claiming that they know secrets and nobody else knows, you should know immediately that you're being groomed for a con. And it's as simple as that, because there are no secrets. The simple reason is there's too many clever people out there backed by serious money. And believe me, if there was a secret, they'd find it out. Take my word for it. So what you see at the chart is the truth. And what's good about VSA is because we don't use mathematical formulas, we use relative volume. And that means that it could be millions out, but it doesn't matter to us because they can't be that much out that they affect the relative volume. And I think if you make a study of it, you find that's right. And even the price spreads, we use relative price spreads. So that also helps us. So we can smooth our way through a lot of skullduggery that goes on in the stock market.
Okay, thank you, Tom. With regard to the yellow boxes in the plugins, Philip informs us that he thinks you can switch on the yellow boxes in the plugins. Thanks, Philip. Thank you for your help tonight. Much appreciated. There's a comment from Lance. Lance, if you would be so kind as to email me with your comments and your questions, and we'll see if we can come back to you with an answer. And my email, I'll type it into the box in a moment for you to see. Me asks, can you comment on the indices, Tom? But as we're running out of time, there are 2 more questions here. And Tom's going to be doing his newsletter tomorrow. And he usually does look at the daily charts then, so he will do. So if we try and cover at least 2 of those, I hope that's okay for you. Okay, I've put up a 15-minute chart there, Tom, yeah. And Mark comments, this 15-minute looks like it is forming an arrowhead. Do you want to comment, Tom? Yeah.
Well, it might or may not be forming an arrowhead. We're not quite sure, but you can't beat reading a chart. This is a 15-minute look. So there's the up bar. There's the ultra-high volume look. Markets don't like heavy, high volume on up bars. And there it is, bang. Right, so something's happening. Right. Note these bars are no demand. Professional money have seen that, right? However, down bar, there's a surge in volume, a surge in volume as they're trying to conjure up an up move. But there's not a lot of enthusiasm there because the next bar's up. It closes off the high and the volume is certainly, not low, but certainly not vigorously. Volume is not expanding on up bars. It appears to be expanding on down bars while decreasing on up bars, which is bearish. Right, so up it goes. Right, the volume here, don't forget it's volume spread analysis. It's closed just off the high. You're in the fresh high ground. There is a little bit of volume there, but the next bar, look, bang, down it comes. The close is lower than the low of the previous bar, which confirms it's a top reversal.
Supply coming in.
So the computer tells us through a signal that supply is coming into the market. Read these dialog boxes. There's a lot of information there in those boxes, although I keep saying that because somebody said, oh, people don't bother to read them. So you'd be very foolish not to study those dialog boxes. Okay, so we've got sign of weakness immediately there. Right. Narrow spread up bar, nothing. Down, down, down. That's no demand, look. Decreasing volume on up bars is bearish, right? So bearish is increasing on down bars while decreasing on up bars. That's why you get no demand. And there it is, look. The computer's colored it pink. It's just gone sideways a bit now. It's probably waiting for a, perhaps it might get a little shakeout or something, try to get it up. But you've got this overhang in there. And you've got that top to the left, which the market's highly unlikely to want to go up. It's Friday, so it's a sort of day they like to confuse you as much as possible and take advantage of you as much as possible.
Okay, Edmund has a question, which he typed in 3/4 of an hour ago. Thank you for being so patient. I have trouble speculating when price hits resistance and support, whether the price will turn around. I would like to hear more about signs that when a break of support or resistance is imminent.
Sorry, say it again.
Okay, I have trouble speculating when price hits resistance and support, whether the price will turn around. I would like to hear more about signs that when a break of support or resistance is imminent.
Well, it's usually quite clear. See, when the market reaches a previous area of, say, support, that level. Now, if they were going to support that market at that point, which they often do, you'll see stopping volume coming in. You'll see a big increase in volume on a red down bar. So you know that, or smart money, as Gavin calls it, who are prepared to throw in 5,000 contracts into the arena, show that they think they can take that market up to make themselves a profit. And then you want to see a test of that potential sign of strength. And as the market moves up to an area of previous supply, which we've seen on these charts, you get this reversal like we see here. So as soon as you see a reversal and no demand, you know that's what you're looking for, because you expect something to happen at these former areas of support and resistance.
Right, thank you, Tom. I think this is our last question now from Rafael. Can Tom give us some clues how to deal with sideways markets during a day? For example, when trading stocks, there is something going on for the first 1 to 2 hours, and then it is bouncing in a small range, catching stops. I don't know whether Tom would probably need a chart to, but we'll try.
Well,
can you answer that without?
Well, it's difficult to answer for me without a chart in front of me to see what you're talking about there. But if you learn the principles, right, and realize if you trade stocks and shares, that if you want to be bullish, you need to select a stock that's acting stronger than the index, preferably. We've seen several examples of that. Stock that will go up and down with the index. And therefore, when you see a sign of strength within the index, you'd expect that stock to go up. In the meantime, the specialists on the floor of the New York Stock Exchange, they just have to bounce along and do the best they can, but they can't move the market unless the general market wants to move as well. But if you make a study of that, you'll be able to see all that logic. But the main thing is you want a stock that's acting stronger than the index, preferably out of a group that's also performing well. Now, we don't show these groups very much, but there are groups like Industrial Group and all the different groups there. Do we have them, Rita? Industrial groups?
I don't know.
We don't see it. Unfortunately, most of the people want me to talk about these futures. But we should talk more about stocks and shares. Gavin will be back here in England next Tuesday. And as you all know, he's in Sydney with two of his mates, Richard Betnall and Dr. Gary Dayton. Now, why they need three of them there, I don't know, but there you are. They're probably having a good time, eating lots of kangaroo steaks and one thing and another. So, but he's the boy you need to ask to start pushing stocks and shares more. But it's very exciting. And of course, if you do it properly, it's the safest way to make money. Because if you pick a stock actually stronger than the index and it pays a dividend, you can't really go wrong, can you? The only thing wrong with it is you need a lot more money to invest in that.
Hello, Raphael. Yes, I did put JP Morgan, because Raphael said there are some stocks like Citigroup and JP Morgan. I put the daily up because that actually, Tom doesn't have intraday charts for the stocks. He doesn't have the data for it. So if you have a question on something like that, it might be best to, if you can, post a chart in the forum. And I'll have a look tomorrow morning even when we're here. Okay, well, that's it for tonight or today, wherever you are in the world. Thank you for coming. And Tom will be back 5:30 UK time, which is 11:30 Central Time, next Friday. And we are doing the newsletter tomorrow, so that should appear on the club tomorrow evening at latest. So thank you very much for coming, everybody. And there's lots of comments here from everybody. Thank you. Okay, great. Nice to see you. And we'll see you next week. Bye-bye.